Welcome to the Transparent FX Academy. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that at the moment we have a very bullish market. We have seen the creation of several monthly higher highs and higher lows, which is the definition of an uptrend itself. And so far, all this push to the upside is coming with very strong institutional buying of gold. And we will be speaking about the institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that institutions are aggressively buying gold, and let's drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite similar. We can notice a series of weekly higher lows, and at the same time, obviously, the market has been creating a series of higher highs along this uptrend. However, it's now already been few weeks already that the market has failed in creating a new weekly higher high. Now, this is essentially what is commonly called an ascending triangle formation, which essentially means that we have a trend line, as I was saying, which is holding the price to the upside. So essentially what you're seeing is higher lows across this trend line, but every time sellers are stepping in when the market reaches the previous highs. However, usually this pattern then leads to a breakout to the upside, because every single time buyers are creating higher lows, and at some point sellers will not manage to hold this level as resistance anymore. And this usually means that buyers are still in control of this market. So that is very similarly what is happening here. So what you could expect usually with this pattern is at some point to see a breakout to the upside and the market to continue higher from this level. Now, dropping down on the daily time frame, what do we see? Now, from a daily perspective, I spoke about gold a few days ago after the market created this W formation. I was expecting the correction and then the continuation to the upside. So essentially for the completion of the W and then the continuation higher. That is what the market did. We had a very minor correction and immediately new buyers stepped in. Now, why this and how did the market manage to immediately rebound after the correction? Well, in order to answer that question, we have to go and see what is going on when it comes to the institutional side of the market by looking at the commitment of traders data. Now, what we can see here is that with the last reports, we went from a situation where we had the low here at 161.2k net positions with 76k shorts and 238k longs, all the way up to now having 237k net positions with 292k longs and 55,000 shorts. So what we can see here quite easily is that institutions have been decreasing their shorts on gold, going from 76k all the way down to 55k, and longs in the same period are getting increased, going from 234k all the way up to 292k. So institutions are increasing their longs and decreasing their shorts on gold, therefore moving back to the bullish side for this market. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find linked in the description so you never miss new updates. Now back to the analysis. So in a situation like this area is currently holding as resistance. Why is it holding as resistance? Well, we can easily notice it as we have already seen on the weekly time frame. This is the zone that every time that the market is reaching it is being rejected to the downside as resistance. Now, until the market will remain below this area, it can easily be rejected lower. However, where things get very interesting is if we get a break above this resistance, because if the market manages to break above that zone, that is where things get very interesting, because after the break on the retest of the previous resistance turn support, that is where we have good probability of seeing more institutional buying, since already we are seeing the institutional buying as we have already seen. And at that point, there is good probability to see a reversal lower for the market to complete a daily impulse correction and impulse pattern to the upside. So if the market will break and retest, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential reversal higher away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.